You're looking at all this excitement around AI right now. There's a lot of excitement around this, right? Microsoft stock hits record today after executives predict $10 billion in annual AI revenue. Microsoft shares climbed 3.2% to a record and now 46% this year. The company could pick up $10 billion or more in annual artificial intelligence revenue from developers using Azure Cloud and OpenAI models, an executive said this week, right? Now, first thing is, AWS is going to end up benefiting in a massive way from all this AI stuff as well. So do keep that in mind, okay? Don't think Microsoft's the only way to play that whole game. AWS will benefit in a massive way. But this cycle you're seeing in AI, this is not the first time we've seen this with these big, huge companies, okay? I remember I got in the market 2008, 2009. And I was just trying to learn everything. And then, I'd watch a lot of CNBC, especially like 2010, 2011, just trying to pick up on terminology. Because when you're getting started in the stock market, usually it takes you several years to really get your feet under yourself, right? And so I'm just trying to pick up all this new terminology and just watching a lot of CNBC and just, embracing what the stock market is. I really loved it and I just started embracing it in a huge way, right? And I can tell you something I heard talked about countlessly was this thing called the cloud. And oh my gosh, it seemed like every flippin' flapjacking day, they would talk about cloud, the cloud. And this was specifically kind of like 2010, 2011. And, I didn't really get it that much at the time. I didn't really realize how big it would be, right? And you could easily say at that time period, oh man, maybe this is just a big, huge bubble or something like that. You could say that because everybody was talking about this cloud. And a lot of people didn't really understand it. They didn't understand how big it was going to be, how big the opportunity was going to be, right? And it came in at kind of a perfect time in terms of everybody starting to talk about it. Because the stock market bottoms Q1 of 2009, right? After that massive epic crash, we had the great financial crisis. And then we started recovering the market in a pretty fast amount of time. I mean, from NASDAQ down to, around 1,300, 1,200 range. To the next thing you know, by the time we were getting ready to go into 2010, it nearly doubled. Think about that for a moment. From where the market bottomed in Q1 09 to where the market exited 2009 in Q4, the market had pretty much doubled in terms of the NASDAQ. Now that's a move. That's a move, folks. In 3 quarters, nearly a double up for the NASDAQ. That's a flippin' flapjacking move, okay? But then the market went nowhere for a bit, okay? Starting as soon as basically we entered 2010, all the way through into about the second half of the year, the market was kind of no man's land. And then a lot of talk and excitement started to happen around 2 segments. One was the cloud, the other was mobile, okay? There was 2 big things happening at the same time. Cloud and mobile, and a lot of people were getting very excited about this. Cloud, meaning businesses moving onto platforms like AWS and others, right? And that whole move to the cloud and how many businesses are going to thrive off that. And some businesses just built these incredible, gigantic corporations just basically off of the cloud. And mobile, obviously, because Apple had, now the iPhone was starting to take off, right? iPhone got shown off in 2007, started to ramp a little bit in 2008, 2009, and then obviously in much more substantial way in 2010, as well as iPad got shown off, if I recall, in 2010. So mobile, everybody started talking about it, right? And you had these 2 things, and that brought up the market in a huge, huge way. And also earnings were behind it as well, right? And so it was a very important thing at a very important time. And this was during a time period when a lot of people were talking about double dip recession. It's going to get worse. Remember, there was very few people that felt like we were going to be okay in Q1 of 2009. When the market bottomed, most people said, we're going lower, we're going lower, we're going lower. This isn't the bottom. You haven't even seen the bottom yet. It's going to get way worse, okay? And I understand probably a lot of people that are watching this video, you weren't around back then. You weren't investing in that market. But I can just tell you, there was no consensus. Like everybody feeling like, oh, we're good now. Everything's going to be fine now. No, people were uneasy. A lot of investors didn't want to buy that market. As that market started to go up in 2009, it was a very hated market because there was a lot of bears caught on the wrong side, saying, look at how bad the economy is. Look at unemployment. Look at the company numbers. And you guys are out here buying the stock market, doubling up the NASDAQ in a matter of months? What are you guys thinking? That's what they were all saying. You guys are delusional. Bunch of hype monsters. We're going to crash back down worse than ever. You have no clue what's coming. And that was the talk, right? And so, some people started to believe that in 2010. And then we had the massive cycle. This one is much higher risk, much higher reward than Palantir and Revolve, okay? Much higher risk, much higher reward. This is the fun one of the three, okay? I mean, they're all fun. They all have tremendous upside, but this is the most fun one maybe of the bunch, okay? And that is Fubo TV, ticker symbol Fubo on this one. Now, this one has been on a run the past 3 months. Incredible, 72% gainer the past 3 months in the stock. And much of that's honestly come pretty much in the past, I would say, we could say maybe the last 7 weeks, 7-8 weeks. I mean, what an absolute run. Now, this is a gulag stock. A gulag stock is any stock under $5 a share. These are the companies that are left for dead, and they're either going to make it back and get out of the gulag and never come back, or they're going to be stuck in the gulag for all of eternity, okay? I believe Fubo is one of the very few stocks that's in the gulag that will make their way out, okay? Now, they're a TV streaming player, and their main focus is on sports. That's really their differentiator. I'm personally signed up for Fubo. I love football specifically in the fall time, college football even more specifically, and so a Saturday in the fall time, man, you see me post it up, I'm going to be watching college football all day. And their technology is phenomenal where you can watch 4 games on your big screen all at the same time. They have the most channels of anybody, which is very important for somebody like a college football fan like myself, because you've got to have a ton of different channels because they're all over the place as far as the games go. And so they're just perfect when it comes to that. And if you're a major sports fan, like Fubo's going to be the streaming service you're going to end up likely signing up for, because you're going to find it just beats YouTube TV and it pretty much beats any other competitors, which honestly Fubo's only main competitor long term, in my opinion, is YouTube TV. I don't even look at anything else as a major, satellite is on a slow decline that's going to last, the next decade or two. Cable, same exact thing. We're moving to this wave of streaming. Like, this is the next wave. And I think YouTube TV and Fubo are going to be the two main players in the market. I think YouTube will always be much bigger than Fubo because obviously they have the backing of YouTube and Google. But with that being said, I think there's a great spot for Fubo to become a absolutely gigantic corporation in this space. Now, if we look at their numbers here, okay? Year-over-year subscriber growth of 22%. Year-over-year total ARPU up 8%. Don't be surprised if that number goes up quite considerably more as the year ticks on, okay? Average revenue per user. If we look at rest of world streaming, subscribers are up 24%. Year-over-year revenue on rest of world was up 43% on a year-over-year basis. Now, this company's a money loser. That's why it comes with big risk versus Revolve and versus Palantir that are profitable companies, okay? Now, in regards to Fubo here, right? Their net loss went from $128 million to $83 million. That's great progress there. They got a ways to go, but that's a substantial improvement. If they continue to do that quarter after quarter, they're going to be looking pretty darn good in a few quarters from now, okay? Adjusted EBITDA went from $95 million loss on adjusted EBITDA to about $58 million adjusted EBITDA loss, 59 million there, okay? That's a massive improvement. Once again, they got work to do to get all the way to the finish line, right? But dang, they're going, they're moving in the right direction. They're moving pretty fast here, okay? In terms of their guidance, they guided for $1.25 billion of revenue in fiscal year 2023. I think that's very doable. I think they could potentially even beat that. Subscriber number, especially now that they got a new lady in charge of their ad business, who I think is going to do absolutely a phenomenal job building up their advertising business, which is just such a big long-term growth vector for this company. Is ridiculous. Subscribers, 1.56 million subscribers are expected by year end, which is a phenomenal number there. Now, in terms of rest of world streaming, revenue expected to come in at $30 million for the year, a little over $30 million, and subscribers expected to come in at 405,000 subscribers for rest of the world. Now, something very important came out in their latest earnings, okay? These two sentences here are massive. In addition, we remain, this is coming from David Gandler, the co-founder and CEO of the company. In addition, we remain confident in our path to generate positive cash flow in 2025. That's massive. Whenever you own a money-losing company, they've got to have a vision on how they're going to get to actual profitability. They got to work out the math, and here's how we're going to get there, okay? And so expect this company to be cash flow negative in 23, 24 until getting positive in 2025, okay? I hope they get there sooner. I mean, at the type of progress they're making pretty quickly here, we'll see. But nonetheless, folks, that's very important that they have a vision on how they get there. A lot of these companies that are money losers, they just, it's like, oh, we'll get to profitability someday. And it's like, when is someday? Like when are we getting to cash flow positive? Like, is that like a year from now, 3 years from now, 5 years from now, never? Like, what's going on here, right? We are confident, and this is coming from Edgar, Executive Chairman of Fubo. He's saying here, we are confident that our current cash balance is sufficient to achieve positive cash flow in 2025 based on our current operating plan. Accordingly, we have no further plans to utilize at the market program based on our current outlook. It basically means the company doesn't expect to have to raise any more money, dilute shareholder value and things like that, which is absolutely phenomenal. Okay, that's absolutely phenomenal. And that's, if you own a money-losing company, this is another thing. They've got to have enough money to get to the finish line, okay, to that day when they are positive in terms of cash flow. Now, when you look at their numbers here, okay, these are three most important numbers that I'm tracking over the next, I would say, 6 quarters or so in regards to Fubo, okay? This is a key. Look at their net loss margin. That improved 2,727 basis points on a year-over-year basis. Adjusted EBITDA margin improved 2,118 basis points on a year-over-year basis. And revenue in total, North American streaming, was up 34% there, right? So, and then obviously rest of world revenue was up 41%. But rest of the world is like, it's really about North America for this company, at least in the short term, okay, as far as financials goes. Those three things, this is everything for Fubo. What's your revenue growth looking like, and are you making massive improvements in terms of your net loss margin and your adjusted EBITDA margin? And they're making insane progress. And so I like what I'm seeing here, and that's what gives me the confidence that Fubo is going to be able to make it through and get out of the dang gulag that they're in right now, okay? Now, if we look at cash and cash equivalents, company has about $358 million of cash and cash equivalents, total assets of about just under $1.3 billion, and total liabilities about $860 million of total liability. Now, do keep in mind, they have a huge portion of goodwill on here, which all public companies have goodwill, so that is a big portion of goodwill. But obviously, they've been building out the business phenomenal, and they're making themselves, quite a nice brand name here as well, right? David Gandler obviously has been leading this company for many, many years. They started out as a $7 per month, streamer, right? And obviously they built that to a much bigger place and a much more impactful place now, where it's actually a legit competitor to YouTube TV, and ultimately the best service you can possibly sign up for if you're a football fan. It's got Red Zone, like I said, multi-view, being able to watch 4 different games at the same time. I mean, if you're an NFL fan, you could have Red Zone on through Fubo, and then you can have 2 or 3 other NFL games all on simultaneously, all on your big screen. It's awesome. Okay. Now, they've also been public since 2020, so he's been leading this company for quite some time, obviously, and been public in the public eye for many years as well in terms of the highs and lows, right? Fubo was a stock that was super hot in 2021, then it got slaughtered, put into the gulag, and now they're on the comeback trail, okay? And so Fubo, under $20, it has a good enough balance sheet to get them through, hopefully, to sunny days. Great needed business, obviously, absolutely, like sports aren't going anywhere. Like, people need to sign up for that stuff, right? Proven management team. They've been leading this company for many years, including in the public eye, and major long-term upside here as long as they can make it through to the other side, okay? Those are the 3 stocks here today, folks, that are buys that are under $20. All have different risk-reward profiles, but all I'm very excited about for the long term.